Rate cut odds are getting higher, and muni bond demand, well, that's getting a little bit hotter as well. Let's bring in Nisha Patel. She's a senior portfolio manager at Parametric. Now, what is going on with muni land? I thought, are these the best of times? Are these the worst of times? Do tell.
Yes. So a few things going on. So as you know, it's been a volatile week.
Yeah.
Muni bonds have also felt that. So I would say, first, from an opportunity standpoint, a lot of our clients have been reaching out, what do I do in this time period? You mentioned the odds of the Fed rate cut are getting closer. So what we've really been telling our clients is, look, the opportunity is not gone, right? So we have seen yields come down. Some of it has reversed.
Do people just jump out of muni bonds because yields are, like, this is what I don't understand.
Yes.
Like, if yields are going up, people say muni bonds, well, they don't do well. But then if yields are coming down, they don't do well. But isn't it the opposite? Shouldn't they do fine under either situation?
They should. But what it is it's a very retail-oriented market. And so you have, maybe during times of rising and rapidly rising rate periods, you tend to see a lot of money leaving the market, right, in outflows. That creates weakness, and it's a cyclical effect. That's where we double down and say, this is a fantastic time to be getting it.
Yeah.
Rates are up. And we've been kind of going along with that message that, look, you're comfortable sitting in cash, and we're not saying, obviously, all this cash is meant for muni bonds, but if you're looking to add to fixed income, you're in a high tax bracket, you want to get in before the Fed starts cutting, right? I mean, as is general the story.
Well, hey, Fed starts cutting, to your point.
Yes.
Get the yield while you can. Harris presidency. Maybe taxes are going up as well.
Exactly. So I think it's two things. I think right now supply has been very robust, let's just say. Year over year, muni issuance has been up about 30%.
Wow.
And a lot of issuers want to get ahead before election time. So these periods of high issuance are creating pockets of opportunity. So we're saying leverage this now. After election, as there's more certainty, there's going to be less issuance. You're going to start to see, I think, a lot of money kind of going into fixed income or into motion if Fed cuts do start, and taxes could be going up.
I think that makes a lot of sense. If I'm sitting at home, I mean, a couple of areas that you think briefly might be most attractive would be where in muni land?
Yeah, so I mean, look, we are focusing, and most of our clients at Parametric focus in the investment grade space. So I would say that with spreads that are generally tight, quality is going to be most important. Yeah. States are going into, however this recession and slowdown pans out, fairly well. But as a lot of that fiscal stimulus runs out, active credit management will be important. Spreads are tight, stay high quality.
Yeah, as it runs out, you don't want to be exposed to a place that interesting. Well, that's why you do what you do. Nisha, thanks for joining us.
Yes,
good to check in. Nisha Patel.